you recently announced one Bitcoin to reach $1 million. When? And based on what assumptions?
Yes. So I've come at this in a number of different ways. One is there's somebody you can find on Twitter called Plan B. He's an anonymous who actually works for a family office in Holland, and he's a quant. And he analyzed a stock to flow model, which means they look at the amount of supply over time of an asset and how it affects price. It's scarcity, essentially. It's the same way that gold works, diamond works, things like that work, rare assets. And it becomes relatively predictable, interesting enough. That predictability would suggest that we might get somewhere like $1 million by 2025, 2026. Then we can use the logarithmic scale and look at the price of Bitcoin on a logarithmic scale. It kind of gives you the same price projections. Then the other way of looking at it is looking at the total amount of above ground supply of gold and its price, and then do the same for Bitcoin, and you get something similar. Basic charting techniques give you something similar. So there's a number of things that suggest that. But at a more sensible level, $1 million is it going up 100-fold from, well, it's now gone up to 20,000. So it's going up 50-fold from here.
Mm-hmm.
So Bitcoin is currently worth, Bitcoin's currently worth about $300 billion in market cap. So that's saying, okay, Bitcoin's worth $1.5 trillion. That's still only 10% of gold's market cap. Oh, sorry, not 10%. That's about gold's market cap, sorry. That's about $15 trillion. Gold's $11 trillion. So it's saying Bitcoin will be the same price as gold. Now, where's gold going to be in 5 years' time? Probably double or triple from here. So Bitcoin's going to be somewhere like 25 to 50% of the market cap of gold at the same time. So that's not unreasonable. So all of these things come together to say, it sounds crazy, but they all kind of add up.
Mm-hmm. And what are the supply-demand circumstances?
Well, yeah, it's fascinating.
For that, yeah.
I mean, basically, supply is restricted, algorithmically restricted, so it can never be changed. So you always know what the supply is. So then the question is, okay, what is the demand? Well, what's interesting about this is the more it goes up in price, the more the market cap goes up, the more financial institutions need to have it. It's also, its price performance also draws more into it. So we've got a very, very skewed risk reward, which is why it tends to go extremely fast, extremely far. It's the best performing asset class of all time over 10 years, 5 years, 3 years, 2 years, 1 year, or something crazy. I mean, we've never seen an asset like this before. We haven't yet got the institutions into this. They're all coming into it. I know they are because I'm speaking to them all. I just got off the phone with the largest investment advisor firm in the United States. Their founder is teaching as many investment advisors as he possibly can why Bitcoin. They can't invest yet because there's no ETF. But the moment it comes, these guys have 5 trillion of assets amongst the investment advisor community in the US alone. And if they were to put 1%, 10 basis points in, that's 5 billion immediately. But the chances are it's going to be much more because it's a very fast moving asset. So we've got, I've never seen anything like the skewed risk reward currently in Bitcoin. It's crazy. And meanwhile, the supply can't adjust. And everybody's taking their coins off exchange and putting them in storage because they also expect the price to rise further. So there's literally no supply. Out of the Square Cash app and PayPal, they're pretty much taking all of the mine supply of Bitcoin off the market every day. And then we've got the Grayscale Trust and then everybody else. There's just, the only answer is the price to go up.
Mm-hmm. Is it going to perform similarly versus the euro?
Versus the euro?
Yeah.
No, I think it decouples from the dollar in every way, or the euro in every way. There's passing correlation between currencies. I think it's what's called a Bayesian distribution, which means it has a shifting factors that affect it. So sometimes it trades like gold, sometimes it trades like equities, sometimes it trades risk on, sometimes it trades risk off. But I think overall it's non-correlated.
So we cannot expect the big Bitcoin to reach like 800,000 euros.
Yes, yes. I mean, you know, currencies.
I meant in that terms, yeah.
Yes, absolutely, without question, because
Mm-hmm.
the euro can't go, above 150, or could it go down to 80? Yes.
Yeah.
But that the order of magnitude is so small compared to a 50x rise.
Yeah, it is. It is. Can't the institution just ignore Bitcoin?
No,
No.
again, speaking to the financial advisor today, he's like, the problem is all the clients are asking for it. And
Yeah.
that is the problem. And I'm sorry, but every day when you get an announcement that Fidelity's in the space, and this asset manager and that asset manager, and they get the incremental better alpha, it forces everybody else to do it. So it's as George Soros would refer to them, this is a reflexive loop. It's highly reflective, probably the most reflexive I've ever seen, because almost everybody has a fear of missing out, or in financial market terms, is short call options on the way up, and everybody's forced to buy on the way up. I've never seen anything like it, literally.
Are we about to face major systemic shifts in relation between fiat money, gold, and Bitcoin in the not too distant future?
I think the major systemic shift that everybody fears is not coming yet, which is, a hyperinflationary total collapse of fiat money. That's the extreme version. I do think that something like what the IMF is talking about, a one-off large devaluation, could happen. That's essentially a Bretton Woods format. It's essentially, when the US left Bretton Woods, we've seen these kinds of things agreeable amongst a League of Nations. That's possible. So, if we do that, well, these assets, gold, Bitcoin, will do extremely well, as will property, as I mentioned it before, and maybe emerging markets. So they're all part of that same spectrum or basket that tends to do well in those environments.
Is the 1 million euro Bitcoin going to coincide with the fiat money collapse?
Yes, I'm sure within the next 5 years, we have to reach this grand bargain. So I think it's all part of that. But it doesn't, maybe Bitcoin is just predicting that path, on this nice logarithmic scale, which is also part of Metcalfe's law and this kind of stuff. But maybe, yes, maybe that's what the price is telling us.
Your Real Vision channel just published an extensive documentary analysis on Ethereum. Where does it come in all this?
Well, it's difficult to know because the pace of change of what is happening in the Ethereum ecosystem is extremely fast. Bitcoin, everybody's kind of settled on what it is, and will people develop other applications around it? For sure. Ethereum is like a platform for the future of trust, the exchange of the internet of value. What could that be worth more than Bitcoin in total market cap over time? It could be, I don't know. So I'm very interested in it. I see a huge amount of really smart people involved developing projects there. People trust the ERC20 protocol, stuff like this. People are building tokens there. People are building decentralized finance. It's all happening on Ethereum. There's no one killer thing, but it's not Bitcoin, and everyone gets confused. I don't think of it as a currency. I kind of think of it as a share of a future platform, while Bitcoin, I think of it as a pristine reserve asset, and I just don't think they're the same thing.